is tunnel vision. From planet to planet, solar system to solar system, from galaxy to galaxy.
Welcome back to the Mortgage Marketing Update. I'm Brian DeMarie. I'm a loan originator with Union Home Mortgage and the DeMarie lending team. Let's look at this Citigroup panic euphoria model. Again, comes out once a week. They've been tracking this since 1987, and we can learn quite a bit from this. Down just a little bit from, last week was super high. It's now to 1.89, still like historically high levels here. So keep in mind, historically, if this gets above like that 0.4 range, usually the stock market seems to top out around at that same time with it, right? There are two exceptions. That is the dot-com bubble from 2000, and when the euphoria model stayed there at about 3 years, and right now. So typically, when it comes to bubble conditions, we see that the market is usually when it's perceiving everything to be really, really strong. It's usually when the market's in perfect conditions. And when we look at our market now, that's really not what we're seeing. Unemployment is super high. It's a possible double dip. There's some weakness and unpredictability here. A lot of uncertainty, a partial recovery maybe. And in 2019, we had a really, really strong economy, record lows on those unemployments. Stocks also, when we see the stocks going to the levels that they're at right now, it gives a lot of pause to some economists. Really confusing here because, a lot of people that are predicting these markets are relying all on these accredited policies, and the Fed keeping everything at zero is a help also, but this might be the only couple of things that are keeping the whole market glued together right now. So we'll see where this goes from this point, but when anything gets this high, a lot of people are pretty curious as to where it's going from here. So just a little bit more market trivia for you. Right now, the value of the stock market is $42.6 trillion. That's twice the size of our economy, which is at $21.2 trillion. At the time of the dot-com bubble, when things were really high as well, this is March 2000, the stock market was 1.4 times the value of the economy. So sort of put things into perspective as of where we are. In addition to that, 30% of U.S. homeowners have zero outstanding debt on their primary residence. This is up from 34%. That means they have no mortgage, no equity lines of credit, and no reverse mortgages. So a lot of people are paying down their mortgages and just getting debt free. They're seeing the opportunity here. I don't know if they're cashing out those stocks that have skyrocketed in value, or it's just time has come for baby boomers to just pay off their mortgages. But a lot of people are finding out that it's a lot easier to get through life if you don't have that extra payment there. We are still hiring for loan originators. If you know anybody that has a lot of experience and an existing pipeline and you think they'd be a great fit for Union Home Mortgage, just text me over their info. Lily and I will be happy to reach out to them. All these videos are backed up on YouTube. Check us out on Instagram. Talk to you soon.